Imagine waking up one morning and seeing headlines everywhere saying that Donald Trump is pushing a shocking new idea that could completely reshape the way Americans buy homes. A 50-year mortgage. Yes, half a century of payments. For some people, it sounds like a dream come true. For others, it's a financial trap waiting to snap shut. But what's the real truth behind this proposal? Is it a path to easier home ownership or a long-term burden disguised as a gift? Today on USA Benefits Update, we are revealing the hidden truth behind Trump's controversial 50-year mortgage idea and what it really means for millions of American families. Right now, the United States is facing one of the toughest housing markets in decades. Prices are sky high, interest rates have been unpredictable, and first-time buyers feel locked out at every angle. Owning a home, a cornerstone of the American dream, has started to feel out of reach for millions. And in the middle of this crisis, the idea of extending mortgages to 50 years has captured massive attention. It's bold, it's surprising, and depending on who you ask, it's either a lifeline or a time bomb. So let's break it down in simple, honest terms. What exactly is Trump's 50-year mortgage idea? The basic concept is straightforward. Stretch the repayment period from the traditional 30 years to an extended 50 years. By doing this, the monthly payments become significantly lower. That means homes suddenly appear more affordable for people who are struggling month to month. A house that may cost $2,500 per month on a 30-year loan could drop to something like $1,800 or even less on a 50-year loan. For many families, that reduction can make the difference between qualifying for a mortgage and being denied. But here's where the hidden truth steps in, because while the monthly payment goes down, the long-term cost skyrockets. A 50-year mortgage means you're paying interest for 20 extra years, and in the world of mortgages, interest is where lenders make their money. On paper, a 50-year loan sounds like a blessing for cash-strapped buyers, but when you calculate the lifetime cost, the buyer ends up paying far more. In some cases, nearly double. And this is the part many people are not talking about. It's the detail that gets buried beneath bold headlines and political excitement. For example, imagine taking out a $400,000 mortgage. On a 30-year loan, at a typical interest rate, you might end up paying around $850,000 in total over 3 decades. But with a 50-year mortgage, that same loan could cost well over $1 million by the time it's paid off. Yes, the lower monthly payment feels like a relief, but that relief comes with a price: decades of additional debt, more interest, and far slower progress toward actually owning the home. And speaking of ownership, another hidden issue is equity. Equity is the portion of the home you truly own. It's your wealth. It's what helps families build financial stability. But with a 50-year mortgage, your equity grows painfully slowly. In the first 10 or even 15 years of the loan, most of your payments go toward interest, not the principal. That means you spend a huge chunk of your life paying the bank, while the amount you truly own barely moves. This slow equity buildup could trap millions of people in a cycle where they feel like homeowners, but don't actually build wealth the way previous generations did. Another major concern is age. If someone takes out a 50-year mortgage in their 30s, they'll still be paying it off when they're close to 80. If someone starts the loan in their 40s, they might be making mortgage payments well into their 90s. And life doesn't always go as planned. Job changes, health issues, family responsibilities, retiring earlier or later, all of these real-life factors can make a 50-year mortgage far more complicated than it sounds. Stretching debt across half a century may give short-term comfort, but it can also create long-term uncertainty. But to be fair, the idea does have supporters. Some argue this is a modern solution for a modern housing crisis. Wages have not kept up with home prices. Housing shortages continue. Rent is extremely high. Many young adults feel hopeless about buying a home. For them, a 50-year mortgage could break down the barrier and allow them to step into ownership, even if it's a slower road. For families living in expensive states like California, New York, and Florida, stretching the loan could make the difference between having a home and being lifelong renters. Still, the biggest question remains, does this idea actually solve the housing crisis, or does it just make it look better on paper? Lower monthly payments may sound great, but if demand rises because more people can afford homes, prices could rise even higher. And if prices rise, the affordability issue gets even worse. So the proposed solution might end up becoming another problem. These are the kinds of hidden truths many Americans don't hear in the headlines. So where does that leave us? Trump's 50-year mortgage idea is bold, surprising, and could give immediate relief to millions. But the long-term cost, the slow equity, and the extended debt raise serious questions. Homebuyers need to understand that cheaper monthly payments don't always mean a cheaper home. Sometimes the real cost is hidden in the years ahead. As always, the smartest thing you can do is stay informed and think long-term. Before getting excited about lower payments, ask yourself what it means for your future, your retirement, and your financial freedom. The American dream is not just about owning a house, it's about owning it fully, building equity, and securing stability for your family. If you found this breakdown helpful, make sure to like, subscribe, and tap the notification bell so you don't miss any important updates on Social Security, stimulus news, housing changes, and financial benefits across the United States. This is USA Benefits Update, bringing you the truth behind the headlines. Thanks for watching, and I'll see you in the next video.